Did you know that Chamath Palihapitiya gave a last warning to Tesla stockholders? Many stockholders of the EV company have been in constant unease in recent months, especially when the stock experienced a dip. Make sure to stay tuned and keep watching to find out about Chamath Palihapitiya's warning. A lot of companies' stocks have been experiencing extreme fluctuations in pricing ever since the COVID-19 pandemic swept across the globe. Of course, it is normal in the stock market for stocks to fluctuate. However, it was in the extremes as of late due to the pandemic that affected the world's economy. Today, you will find out what Chamath Palihapitiya's last warning is for Tesla stockholders. Tesla is a clean energy company that manufactures electric vehicles, or EVs, among other things. Although a lot of big automotive companies have started or announced their plan to start in the EV industry, Tesla remains on top of the game. This claim is supported by a lot of investors and analysts, one of them being Chamath Palihapitiya. Who is Chamath Palihapitiya, and why should you heed his words? Chamath Palihapitiya is a Sri Lankan-born Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital, and was an early senior executive at Facebook from 2007 to 2011. CNBC describes him as the founder and CEO of Social Capital, whose mission is to advance humanity by solving the world's hardest problems. With an estimated net worth of around $1.2 billion as of April 2021, Palihapitiya is ranked 2,378th on the Forbes list of billionaires 2021. Social Capital was founded to invest in companies in fields being ignored by other venture capitalists, like health, financial services, and education. The firm has since expanded to invest in tech companies like Amazon, Tesla, and Slack. In a recent statement, Palihapitiya shared that the Tesla stock has a bright future and will be worth double and even quadruple in the years to come. However, despite being a Tesla bull, he cannot ignore the fact that the present state of the economy is not at its best. In fact, experts say that the U.S. is on the verge of a recession. According to Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invest in innovations like self-driving cars and genomics, the U.S. is already in a recession, only that the Fed has not announced it officially yet. Palihapitiya said, "The thing that you have to do before you talk about what is happening now, I think, is probably useful to go back and start at the end of the great financial crisis. The reason is there were a bunch of people coming out of the GFC who were confused about what the US government and some European governments were doing. The global financial crisis, or GFC, refers to the period of extreme stress in global financial markets and banking systems between mid-2007 and early 2009. He said that at the time, there was the risk of a huge financial contagion, and so the US stepped in and the Fed started to use its balance sheet to buy toxic assets. The Fed, or Federal Reserve System, is the central banking system of the United States of America, which was created on December 23, 1913. With the enactment of the Federal Reserve Act, after a series of financial panics led to the desire for central control of the monetary system to alleviate financial crises. In line with that, a lot of governments did it, and then there was a body of people who coined the modern monetary theory, which in simple terms is like saying, hey, you can keep printing money and introducing it into the economy to smooth things out and to drive long-term growth. By definition, modern monetary theory, or modern money theory (MMT), is a heterodox macroeconomic theory that describes the currency as a public monopoly and unemployment as evidence that a currency monopolist is overly restricting the supply of the financial assets needed to pay taxes and satisfy savings desires. This theory states that government spending should not be restrained by fears of rising debt. It turned out that several government officials fell for it. However, MMT does not address the opportunity cost and distributional consequences of the monetization of deficits by the central bank, e.g. its impact on asset prices, which may affect both the demand and the supply side of the economy, and therefore the inflation constraint, even before full employment is reached. Palihapitiya said, "Fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about $30 to $35 trillion of money into the economy that should have never been there. So the thing to remember is that we have not necessarily just been obfuscating true supply in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system." According to him, people have to realize that all of that money somehow needs to get destroyed in some way, shape, or form if a true economic equilibrium is meant to be found. He added that what is true supply and true demand in the absence of government sloshing money around trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last decade and a half have to get undone. Do you think the US is truly on the verge of a recession? If so, how will it affect Tesla stocks? Share your thoughts in the comment section below. If the US is indeed in a recession, how will that affect Tesla stock and its investors? Numerous people, especially in the business sector, have been hoping the US economy would finally return to normal in 2022 following 2 years of dislocation from the COVID-19 pandemic. However, they may be sorely disappointed today. Supply chain disruptions, a war in Ukraine, elevated inflation, and higher interest rates are raising concerns that the US economy is on the brink of a recession. What is a recession? While there is no universal definition for an economic recession, analysts and investors commonly define it as 2 consecutive quarters of negative gross domestic product, GDP. US GDP contracted by 1.6% in the first quarter of 2022, and the Atlanta GDP Now model is currently projecting another 1.2% drop in US GDP in the second quarter. Chief economist for LPL Financial, Jeffrey Roach, says the key word in the NBER's recession definition so far in 2022 may be significant. A slowdown has to be significant, broad, and sustained before it qualifies as a recession, Roach says. Currently, the economy is downshifting to a much slower growth path, but the decline in economic activity is not significant in our view. If the US does slip into a recession sometime in the second half of 2022 or 2023, there's no reason for investors to panic. Recessions don't historically last very long. The average duration of a US recession since World War II is just 11.1 months, and the COVID-19 recession in early 2020 lasted just 2 months. US recessions are also fairly common. Since World War II, there have been almost one U.S. recession roughly every 5 years. While recessions can lead to job losses and other financial difficulties for Americans, they have historically been excellent buying opportunities for long-term investors. It can be extremely difficult for investors to time a market bottom perfectly, and stocks tend to bottom several months before a recession when peak pessimism is reached. According to Tesla CEO Elon Musk, a recession is inevitable. During the Qatar Economic Forum, Musk said, "I think a recession is inevitable at some point. That said, how can a recession possibly affect Tesla stock?" Tesla has been performing well enough on the financial front over the last 2 years. In 2021 alone, Tesla boosted deliveries by 87% to over 930,000 units, with revenue rising by around 70%. Despite the threat of a recession, it does not seem like it will significantly hurt the EV company stocks. In fact, Tesla's business is expected to hold up much better compared to other automakers. Tesla has previously guided for over 50% delivery growth over a multi-year period, while indicating that it could approach 60% growth this year, which signals that demand growth should hold up even in the event of a downturn. Moreover, economic indicators do not point to a very deep recession this time around, with household savings rising post the pandemic and banks also remaining well capitalized. That said, there appears to be no reason for Tesla stockholders to be concerned. Tesla's revenues have been growing steadily at 1% year over year, with a sequential growth of 20%, which is enough proof that the EV company is capable of weathering uncertain times. While this rings true, it does not hurt to heed experts' advice and take into consideration their opinions as they spend time and exert effort on their respective exhaustive studies based on available data. Make sure to visit our channel and watch our other videos.